Hello everybody, hope that you're doing very well and welcome to this evening's Contenders live stream. Well, we have a really packed one today. There's a lot to go through basically. I've got 4 things in particular that I want to cover. That's starting with Tezos chart of the week. Then I want to move on to, I'd like to actually then move on to reviewing the trades from today and yesterday, so over the last 24 hours really, because firstly in the group today there's just been a lot of questions, and secondly, yes, it's really, I'm going to do it like in an educational way where you can like really get into my brain to see how I traded it today, because it's been really nice indeed. So there's a lot to learn on that segment, and then I want to move on to the next segment, which is a trade that I took earlier in the week. And it's a little bit of this hard versus soft stop loss placement. Obviously I use soft stop losses, but I really want to just like go over this trade and review this trade because I feel it's a really good one to review. Okay, and then I want to move on to really the focus of the lesson, which is OBV, on balance volume, what on balance volume is, how we can trade with it, and why it is so amazing indicator. As you know, I'm not a fan of indicators, but OBV, on balance volume, is an indicator I'm a fan of, and it's obviously a leading indicator, very useful indeed. So that's what I'm going to be going through. Funnily enough, I was actually going to be going through the visible range, going through pointer controls and all that today, but because of I done a post, what was this, like about 2 days ago now, saying about OBV and how that signal, literally we had a signal of OBV and it played out perfectly, and then there were a lot of people asking about me doing an OBV, so I thought I'm going to do the like pointer controls, visual ranges next week, and today I'll going to go through OBV, so a little bit of a switch around, but nevertheless here we are. So yeah, I hope that you if you can, you probably might be able to notice, and I think you'll know, but yeah, my I'm gonna have to like tone down my voice a little bit, so sorry if I sound very very just really boring voice, I suppose. I'm not going to be able to like change my pitch in the voice because yeah, I've got a really sore throat, but obviously I can speak, okay, but I just cannot go loud or anything because it's a little bit painful. Cool. So with that said, this is obviously the disclaimer which you should pause and read through before we begin. So hope that you are okay, and yeah, let's go. So Tezos chart of the week. This is actually a really nice one, I feel, okay, because of the stage where we are at in the chart, and this is like, firstly I want to say that I'm not in a position right now, and it's a kind of the one where we're waiting for really, I'd say, a swing failure pattern of the lows. Again, I'm going to talk you through some of the confluences we have here, and if we don't get a bounce, where we can likely expect a bounce to occur. Okay, so I think you can see, let's just remove some of these things off of the chart a second so you can actually see what's going on here a little bit better. So if we just remove this and remove this, so we don't need that one on the chart really at the moment, or that. Okay, so really simply, okay, what we have started with on this chart is a parallel channel. Okay, so we can see the low, the midpoint, the low, breaking through, midpoint back tested up to the highs, midpoint, lower high, and as you will probably all know, you can't get through to CC, rejection, and you're coming back down. So that's kind of what we're left with on this chart. A really nice parallel channel, a really big weekly support level, and a 618 rejection. Okay, so now from here, this is kind of our base. Okay, so very much of a base, and now we're trying to expand upon this, and I think Tezos is coming down. Obviously it's a coin that moved up really nicely. Okay, so it's moved up from its lows about 175% in a quick space of time. So was one of the more bullish altcoins over the past few months. Okay, very much so. So with that said, now we can like try and join into some confluences. So the first one that I really always like, as you all know, really like to go for these one-to-one extensions. Okay, and that is, I'll do it so you can all see. So that's obviously from our high to our low to this next high. Okay, and you can see the one-to-one extension both times was not quite hit. Okay, so it's really real slight front run. Okay, so you got the slight front run and actually a 34% bounce before coming down for a double bottom and fizzling out somewhat. Okay, so it's maybe like a descending triangle, looks like it's going to break down. Okay, so that's the first thing that we have. Right below us is the 1-to-1 extension, and then obviously just below that you have the weekly itself. Okay, on top of that we obviously have, then from this low to this high, we have the opposite CC, and you can see why you front run the 1-to-1 extension. It's because you did hit the 618, so pretty powerful. That 618 did give like a 34% bounce, but obviously in the end you can kind of make it out here. Okay, so you can just see lower high, lower low, lower high, double bottom, lower high, and it looks like it's going to go down most likely, doesn't it? So that's what else you have on. And then I like the fact that we're coming up with this speed resistance, okay, or just our Fibonacci fan. We also have the 618 time coming down for this move. So I'd say there's like an intersection of really big support here. Okay, 1-to-1, 618, 66 weekly, all coming like together here. Okay, so what am I looking for really for me to actually get into this trade? What I would like to see, if I'm honest with you all, is a move down through the lows and bought back up. Okay, and then there's two actual ways that I'd wait to buy this. Okay, because I'm not like overly keen on just buying alts right now. I feel that they're not the best trades for longs. Okay, so you have this resistance line here, which is making our like lower highs. Okay, and you could argue that this is an important level as well, but what we're looking for is really for this to come down, break the liquidity, get back above, and then I would say look for a move back above here. Okay, so you want to see it build some form of base here. Okay, kind of, I suppose, somewhat like a kind of a spring and then a test, and we're wanting to see some like bullish market structure coming into this, and moving up from there. So there's like two segments of what we'd like to see on this chart to warrant a buy. Really we're just looking for, it would be best if it's a swing failure. Okay, you don't really want to see it drop and then like start closing around here. It's technically an okay buy, but I'd much prefer to see a swing failure pattern. Okay, and then off of the swing failure pattern, I'd like to see it regain market structure. So I'd be looking on like a 1 hour chart, get back the bullish market structure and really closing above this high. That would signify to me we've come down to a major support level. The major support level is hold, and with me managed to push on fast resistance. That for me is enough confirmation that I would be happy to put money on the table and buy that essentially. I feel that there's another important place that if we do not, okay, so the scenario that we do just drop down from this support and it doesn't offer much support, then there's a few places for me where I'd really be looking for, and if I'm honest, it's down and around this 618 at the lows here. Okay, the 1618 extension. I really like this one because this is where the bottom of the fix, this is where the bottom of all the volume is basically. So because you go up so fast here, you go down really fast, you go up really fast, and when you go up really fast, you can go down really fast. So that means that the base could easily be built down around this 1618 extension. So it's kind of the possibility that if we don't see a swing failure and we do something more like this, retests, or just do a lower high and we just end up coming back down, I would not be surprised to see Tezos with another, that would bring you down another about another 38%, 40%. So definitely possible. So yeah, those are the two scenarios. So it's not like I'm definitely going to buy this level or I'm definitely going to buy this level. What I want to see is that form of a liquidity grab and then reclaiming the levels, and that for me is enough to buy. I think Tezos could definitely get a relief rally, and just as you saw for this relief rally, that's a 35% bounce. Okay, so there's definitely trades to be had in here, and yeah, that's essentially what I'd be looking for. And you could just safely take it up to the 618, because as you can see here, from low to high comes up to the 618, gets rejected, and then from this one, high to low comes up to again the basically that's 66 and gets rejected again. So if we envision that the same somewhat would happen again from the high they are rejected from down to wherever we get our lows, then it could just be a case that we do. Maybe this is why I was saying like the two levels. Okay, so you obviously can get to this level and claim it, but then you will be still looking, I would say, for this as your first kind of target where you'd at least like definitely be taking profits. You do not want to get greedy on altcoins at the moment. They're not good. Arguably they're not good long trades for swing trades. You just want to get in and out of them. So I'm not trading alts really at the moment, but Tezos is one of the only alts that I am really watching. And I will be happy to buy in if there is like a sign of strength, and until I see that, I'm not going to be buying alts, period. But you know, Tezos is one on my radar. I'm waiting for this setup to really come to me, being patient, and you know, I will take this one if you know, that criteria that I've just mentioned there is kind of warranted. Okay, so a question like about about how you could place like stop losses, and that's going to be a case of, you know, if you do swing failure this low, okay, and you do then come back up in some like bullish market structure, okay, let's say we form some form of a base here, okay, it's going to likely be something like this, you know, or you could, you know, you are always generally going to go bang, and then you could take it one more time, and then you come back up, but you're generally going to be looking for some sort of, you know, initial base to be built, okay, once you've gone through the lows, okay, and we're really looking for the quick buyback, okay, after that quick buyback you will generally retrace some of it and then come back up again. Okay, and then obviously we're going to be looking for really this high to be claimed. Okay, so obviously if you are looking to buy this, if you've got to this stage and you've waited for confirmation, you don't need to have your stop loss this low. Okay, your stop loss doesn't need to be that low, because if you've built some sort of a base here, okay, and you've got gained bullish market structure, then your stop loss is going to be closer. Okay, so your stop loss is going to be closer. You don't need to use such a wide stop loss, although you could, but I would say there's no need to use such a wide stop loss. Okay, this is where you'd use closer market structure, a more of a, you know, there's no need to have your invalidation for the trade at this low if you've come off of it with a, you know, with a strong buyback. Okay, there's no need to have such a wide invalidation. So that's what I'd mention with that stop loss as well. So that, yeah, that's Tezos. That's what I'm looking for, and I think this is a nice potential trade that we have coming on here. Okay, obviously down at this 618 we did have the point of control. That is also your lower monthly. Okay, and obviously on the flip side, the big monthly resistance sits at, you know, around this area of old consolidation. As you can see, this one like done a head and shoulders, so I think we might be reaching that. There's the left shoulder, there's the head, there's the right shoulder, and if we actually see, this target is going to be slightly lower, by the way, but we can see where that comes down to. Yeah, so around to that 618 as well. So that's just interesting, you know. I'm not going to say, yeah, but, you know, we're definitely going to bounce it. So, you know, that's why I want to wait to see what happens here before I put any money into this coin. I really want to see it actually looking strong to me rather than just thinking it might be strong. You know, I'm not going to try and catch a knife on Tezos, like, or any altcoin, to be honest with you. So yeah, with that said, I want to now talk you through Bitcoin, because the trades that I've done today and yesterday have just been so perfect indeed. Okay, I'll talk you through exactly what I've been looking at in greater detail. Obviously, I've done a little bit of this in public, but I want to talk you through in greater detail. All questions that you have about this, I will save all questions to the end. So don't think I'm ignoring your questions. I'll do them all at the end. Okay. So yeah, let me talk you through this chart in a lot of detail and and what the thought processes are. Okay, I really want you to like get into my mind and really understand like what I'm looking at for these trades, because yeah, it's so nice trading. Okay, all originally obviously started with we can like slowly remove these things, so we do need this one for now, this and this. So it all started with obviously having our low and our high, and then this low being made. From that, obviously think back to the parallel channels video. Okay, from the parallels channel video, you will know that all you kind of really need to begin a channel, okay, is your three pivots, your low, your high, and your another low, or two highs and a low. Okay, so three pivots gives you a parallel channel. Okay, so from that parallel channel, what do we have sort of like going on here? Well, actually, I need to take a step back. Okay, so I do need to take a step back before we got the channel, because obviously started off with our fib levels. Okay, so we had a strong move to the upside. Okay, strong move to the upside. As you'll know, generally people are going to be, you have to remember like what this has been like recently. So this has been moving pretty bullishly to the upside recently. Okay, we're seeing big moves and big moves. So off of big moves, what's the levels that people are looking to really buy? Okay, they are very much interested, as you're not going to know, by these sort of, you know, these CC areas, these 618, 66. This region is always going to attract buyers in a strong uptrend. Okay, generally speaking. Okay, not 100% of the time, but you know, there's a good probability. So we obviously were going from low up to the high, and you come down to the 618 and you got another bounce here. Okay, so I was actually asleep during this first one, so I did not actually trade this long. But what we had from here was our move back up. Okay, and from our move back up, what we done here was really interesting. Okay, so obviously we come up, we swing failure pattern the high, so that's obviously our first signal that this might not push higher, after seeing a swing failure and coming back down, and then doing it once again, just unable to take the highs and moving back down for a low. At this point, this is where I start thinking, okay, we've come down from the, this CC region, and we've bounced, and from this CC region we have got the confirmation that we're rejecting, and that's in the form of like market structure at this point. And from that, there's straight away the first thing I'm going to be thinking is bringing on like a Gartley pattern. Okay, and that is from coming to your CC to CC. So many times you are going to see this happen in crypto. It's just unreal the amount of times you get this. Okay, and then obviously, so from that CC rejection, as you all know, I was posting this in the group chat before it happened. Okay, we were obviously looking for this to drop down to give us our D. Okay, where we were looking for long orders. Okay, and obviously that occurred. Okay, so we obviously got our move down for the D, and that is obviously what you're looking for is around a 786. Okay, so this long lower wick through the level does definitely not invalidate it. That's not an invalidation of a Gartley pattern. This is totally fine and valid. And obviously that did give us our long position. Okay, and through this next bit I'm going to speed it up slightly because I've already talked about it, but what we had through here was obviously our move back up to the top of the channel. Okay, top of the channel, back down to once again the lows, as you'll know from this Fibonacci pool. You still have the CC there, but also what you will see is from here to here. Okay, it's obviously slightly front run this CC, which is somewhat a sign of strength. If you're seeing it not reaching the CC and bouncing, and also, as you all know, what's this called? It's called a partial decline. So there's a sign of strength there, isn't there? Okay, so after we had obviously seen that sign of strength, we do move out of the channel, we do back test the channel, and this is obviously, again, like Fibonacci in this market right now is really, 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 really amazing. So then from this low to this high, we come down to the CC again, which is also another back test of this channel, and we get another follow through. Okay, but again, the highs are just unable to be taken before falling back down and back testing our channel here. Okay, and then as you all know, from this low to this high, you are coming back down into like a CC on a CC region, so pretty strong support. Okay, obviously that then gave us our big move to the upside. Okay, and brought us more or less to where we are now. This was obviously a swing failure pattern of the highs back at 6,950. Okay, so from that rejection, we obviously came straight back down to the lows, and this is where it's pretty interesting for me. Okay, again, this is like all documented in the group before it happened, and obviously when we came down to these channel lows, as you'll know, my thought process today was I'm gonna, I took a long position, and this is where emotionally, okay, so this is where emotionally speaking, you have to be very, 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 very strict on yourself. Okay, very strict on yourself indeed. Because what you have to imagine here is a massive move down, okay, a massive move to the downside very, very quickly indeed. What is everybody thinking when there is a massive move to the downside? Automatically, everybody becomes extremely bearish, okay, extremely bearish indeed. And in my opinion, there is the opportunity to play a bounce, okay? So obviously, as you all know, if you're in the champions group anyway, my idea while we were still at these lows was I'm trading this for a bounce, okay? So firstly, let's think of the support reasons. What we had the bottom of the channel. Okay, we had come down and we had taken these lows. Okay, we had taken these lows. We were at the bottom of the channel, and for me, the funding rate. So I'm going to show you what the funding rate was looking like. We can see it's actually changed now. It has changed, but we were looking at a predicted funding rate of 0.14, which just showed me straight away there's a clear imbalance between spot and back on BitMEX, and clearly there's a strong involvement of the bearish side. Okay, so the short was really crowded at this point, and natural because of the speed that we had come down, everybody becomes really bearish and forgets to look at the bigger picture here, which is we've been moving up strongly. Okay, so it's like a mixture of technical analysis featured with trading off of the emotion of the market. So right now I'd say the emotions, it's really great. Okay, it's really great to be trading Bitcoin, to be trading the stocks, because right now there's a lot of emotion in the market. Okay, and generally speaking, you can make advantage you can take advantage of people's emotions running really high. So this was a typical one where you can take a kind of advantage of the emotions running high. Sorry. Oh man. Yeah, so from these yeah, basically, so this was a long position taken, and really simple, really simple. You did get a strong bounce to the upside, really high wick, okay, and it was a reason why I went into a short position after. It was after we had just like wicked through this, and it was because of the point of control that we had of this range here. Okay, well, this is obviously changed now because of this price action, but our point of control was actually higher around like here. Okay, so because of now this extra data, we can't go back and check, but our point of control was higher. I think it was actually around like this price. Okay, but it was definitely higher than where it is now. And we obviously had rejected off of the point of control. We had rejected off the CCM. We had rejected off the middle of the channel, which for me was enough reason to close out of my long and take a short scalp. And from the short scalp, we obviously did reject in the end, and it was like, it took a bit longer, but we obviously took a little bit of time, and then we come down once again to the low of the channels. Okay, so from the low of the channels, once again we did get our bounce here, and we're coming into a little bit of a equilibrium in the sense of there we're coming into, you know, reduced price action. This is like contracting and contracting, where we're going to get a break of this shortly. Okay, so we're either going to take the highs or lows of this. So currently I would say there's a few really key levels to watch out for. 6,900 is a really big level for me. If you see the fixed range, taking it from where we broke up, so really right where we broke up here, if you take it to where we are now, you can see how really nice the point of control is like acting as support right now. Okay, so why is the indicator not loading? Sorry, trading view is a bit of a weird sometimes. So you can see from our point of control here is support and support, but the bounce is, well, it's obviously just contracting price action. So for me, we got this 6,600 important support, still the low of the channel coming in as well. So around this like $50 region, it is still support currently. So yeah, we got that support. But then if you bring this closer, so this is what's interesting, bring this closer to where we could say the actual range that we are in. Okay, from the highs to the lows of this current smaller range, you can see that we also are below the local point of control. So you got like a bigger macro point of control and this local point of control within literally like $50. So they're pretty close. But for me, yeah, it's contracting price action, and it rather I wouldn't like to say anymore. So off of the trades that I've taken today, I'm currently not in one. I'm actually head short right now, but kind of like no position, I suppose. But yeah, I would say you're better off like trying to trade a break from this rather than I mean, I myself, I wouldn't like to say whether this is going to break up or down right now. Factors that have me leaning bullish are the funding. Okay, so the funding is really still favoring longs. So yeah, the funding is really favoring longs, but obviously you are off the back of a big swing failure and then a big rejection follow up. So I would say to be more like confident in longs, I'd really like to see now us lose this channel support. Okay, then that would get me favoring shorts if we do lose this channel support. And on the flip side, I think if you can come back up and claim the middle of the channel, then you're going to be looking at 7,200 fairly swiftly. Okay, 7,200, and then as you know, 7,800 would be my next target after 7,200. But yeah, I wanted to just, I generally don't speak through my trades in contenders live streams, but I wanted to speak you all through this one because it was happening today, and because of the trades, you know, they have been really perfect. So and that's kind of why in like the trading updates that I've been giving you, I have been really emphasizing you know, scalping or like day trading Bitcoin right now is really kind of one, I would say, like the only option. It's just highly profitable. It's not difficult. I would say it's not really difficult trades, and yeah, there's a lot of opportunities. Okay, and because of the emotions are running really high, it's just offering those really good, you know, really massive volatile moves as people get trapped. Okay, so yeah, I wanted to talk you through those two things to initially start us off. Okay, and then before I get into the OBV, I want to talk you through one more, and this is a trade review. Really, I want to highlight the difference between soft and hard stop losses. When is a good place to use a soft or hard stop loss. Okay, and this is referring back to would have been Sunday. Okay, Sunday, where we were. Well, I was looking at this parallel channel. Okay, so we had our low of the parallel channel, and we obviously had our high of the parallel channel in here. but specifically we're just looking at the lows here. What we had done is we had lost the channel, we had back tested the channel, and we had, you know, come back down again, hadn't taken the lows, so we hadn't actually like really confirmed that there was a rejection. We had just seen a rejection and a higher, you know, a higher low from this low at this point. Okay, so having seen though a back test of the channel, one would favor, okay, there's obviously more metrics that we can look at, in particular like volume is really useful to look at here, but nevertheless, you know, we can see that just from price action standpoint that we had been, you know, clearly had back tested that trend line and rejected from it. Okay, and what I really want to emphasize is the way that I trade and the way that I think like 99% of you probably should be trading Bitcoin. Okay, as you all know, I do use soft stop losses, and this is obviously for a picture from the challenge account that I've done here, but these were my trades that day. Okay, so I started off with a sell of 5,900, added a little bit 5,800, done some funding payments here, then I added again at 6,100, and this is as it started breaking up here. Okay, so I want to explain to you, okay, so this is quite a good one to explain, I feel, again, because of the fact, I know for a fact I traded this a lot different than a lot of people, I traded this differently than a lot of people in the group, okay, so it's good to get into my mind of what I was thinking. I just need to use this. Oh my god, this is really actually quite painful. So basically what I was thinking, okay, in this run up, it was off the back of a Fed announcement. Okay, so the Fed had just like said basically along the lines of that they had like unlimited money and they were going to I can't remember the exact story now, but there was an announcement from the Fed, okay, and this was a reaction from that, something like basically looking bearish for USD, and people react off that news. And it was kind of a news-based pump, okay? So because of the fact it was a news-based pump, I never really favor the rise. On top of that, there was also the fact that we were rising on a massive decrease in open interest. Shorts were, you know, not opening, and neither was long. So this was a liquidity run. And as you'll know, like, these are things that I was saying like live in the group. I was saying I'm not actually worried about the rise because this is for me a liquidity run, okay? And because I felt it was a liquidity run, I was happy to like ladder into this, okay? So I took another short at 6,100, and then I took another short at 6,457, okay? So this is kind of like the way that I trade, okay? So what I really want to highlight, I guess I'll read out this slide before I go into it. It kind of will make more sense. So I trade with a soft stop loss for situations exactly like this the other day. Okay, firstly, I can use a soft stop loss because I'm at my computer all day. Okay. And secondly, I will cut positions when I see the traders going against me with zero emotion attached. I'll just close out and not worry, not thinking, oh, it can come back down. All these sort of things that people think about, I will not be like that. Okay, so I would say first I just want to stress that I really think like 95% of you, 99% should not be trading with soft stop losses. Just place a hard stop loss at your invalidation, and if it hits, take the loss and move on to another trade. Okay, because I know that there were people that were using soft stop losses in this situation. Okay, and I guess because I do, then they feel favored to use it, but there's a massive difference between my level of trading and your level of trading. You have to recognize that, you know. So I really don't think the majority should be using soft stop losses here, because what happens here is you can go straight underwater, okay? And obviously my positions originally were underwater as well, and if you are not aware of what's going on, if you don't know how to read things like the open interest at the moment, if you don't know how to read into, is this a liquidity run, or is this actually coming back down, is this going to end in a swing failure pattern, or is this actually got a sign of strength? If you don't know how to read any of those things, if you don't know how to read them specifically very quickly, and you're able to react with zero emotion, then you are going to lose money 100% if you use a soft stop loss. Okay. So yeah, my opinion was that it was a liquidity run, and in the end it ended me on this is on my challenge account. On my main account I actually managed to do a higher ladder and got out with a bit of a win, but on this account I got out basically break even. Okay, so it's basically a break even trade, but this is a use of a soft stop loss. Okay, so if I had just a hard stop loss at invalidation, I would say it would have been above this high 6,000. Okay, I would have taken like obviously a loss on that trade, but then there is advantages to taking that loss. Okay, what could have I done upon taking the loss on this trade? If I had had a hard stop loss and I'd taken a loss, firstly I would have had no drawdown all the way up to 6,600, which you hit, by the way. So all the way to 6,600, I would have had zero drawdown. That gives you a lot of space to work with. I could have gone into a long from here to 6,600. Upon seeing 6,600 rejection, I could have then taken another short. It just gives you a lot more freedom if you have got the freed up capital. Okay. So that is like obviously an advantage of using a hard stop loss, and I think an advantage of using a hard stop loss for many people is because emotionally, I do see it in the group where there's a lot of people that are really panic as soon as a big move happens. Okay, so just like off of the big move that we saw today in Bitcoin, you see this really big move down. And naturally, especially newer traders, there's just so much panic. Okay, so much panic. Everybody just starts going really bearish. Okay, and off the back of this as well. Okay, so off the back of this one, the reverse, they get a really big move up, and then everyone just goes really bullish. Okay, so you have to remove that emotion. You just really have to move that emotion and just trade the chart. Period. Okay, just trade the chart. Period. And I just wanted to like kind of highlight this, firstly because of the fact I just saw there was a really good example of like why. So this was a good example of why I use a soft stop loss, because I can recognize the signs that it was like a liquidity run. I can recognize the signs, okay, if this is the case, then I can ladder into this position, and instead of like taking a loss, get out, break even sort of thing. But it's not just I'm doing this because I want to not take a loss sort of thing. It's because the signs are actually there that this is going to favor me by laddering into a short here rather than, trading it otherwise. And obviously, then you spent a few hours at the low and went back up. But for example, if you were in the situation of using a soft stop loss and you had no idea of laddering into this, and you're now just like just for an example, you're massively underwater, this is going to wreck your whole account. You could get liquidated, you could lose everything, you could lose a massive percentage of your account. So if you are really not strict with soft stop losses, you are without a doubt going to lose money. Okay, without a doubt you're going to lose money. So this is why I kind of would say, especially to the vast majority of people, do not use a soft stop loss. Okay, really do not use a soft stop loss. Use a hard stop loss. Get out of the trade at your invalidation, take the loss and move on. Okay, so we have to recognize that losses are part of trading. Losses are normal in trading. It's perfectly fine to take a loss. And, if you are finding yourself really emotional, lower down your position sizes and just have a stop loss at invalidation. Okay, so at your invalidation, place your stop loss, get out of the trade. What you will notice that if you're underwater in a position, you'll find yourself emotionally looking at the chart, whereas if you close that position, you could have a totally different viewpoint of that chart. Okay, so for example, if you were short and a rise in price, not looking at the chart, you might have said this is looking bullish. Okay, you had the original swing failure pattern and you come back down, but then you could have said, okay, so this resistance has flipped into support. Non-emotionally, you could say at this point, okay, it's looking quite healthy. Whereas if you are underwater, you're going to be finding only bearish reasons, and as price keeps going up and up and up, you're just going to keep trying to find a new bearish reason to keep holding your short, because you're going to think price is coming down. That's obviously not the way you want to be trading. So yeah, I wanted to just add this piece into the live stream just because of the fact there were many people that lost money on this rise because they incorrectly traded it. Okay. And as you all know, I'm not here to hold your hand. I'm not actually here to hold your hand. You have to, when you're actually live trading, you have to be able to manage that yourself. Obviously, I give updates of how I'm trading, but if you do not have the finesse, you do not have the skills right now developed, then if you're using soft stop losses, then you are going to lose money. So please take this as you will, but I would really recommend you use these hard stop losses. Okay, maybe in a few years, okay, then start to use soft stop losses, but kind of don't do it unless you can prove to yourself that you can actually trade like it. So I just wanted to mention that, and I hope that this section here was helpful, explaining like what, just a really nice example. This was like a live kind of example, I suppose, of why I use them, and but also the disadvantages. Okay, so for example, if this was pushing on really hard, I would have just closed out the trade. If it was like increasing net longs, okay, open interest going up, and obviously at that point I would have just closed out the trade. But yeah, that's kind of what I wanted to go over. Okay, so yeah, moving on to the main section of tonight. And this is on balance volume. Okay, so on balance volume. On balance volume is really useful, as you all know. Okay, so as a trader, I generally don't like indicators. Okay, you all know I'm not a fan of indicators. Okay, but on balance volume is not an indicator of price. Okay, it's not an indicator of momentum. It's actually just stating cold hard facts of the an indicator of volume. Okay, as we all know. Volume is an extremely big point of trading. Okay, so when you are looking at a chart, the volume is so crucial to determining whether a move is healthy, whether a move is unhealthy, whether it's likely to push on higher, whether it's likely to reverse. Volume is massively important. So if you can have an indicator that measures volume, well, that's clearly massively helpful. Okay, so I would say that this is a massively helpful indicator. So this is just taken from the internet, but this is the calculations. If you really I don't feel that you need to know the calculations of how it's worked out, because it makes no difference to us how it's really calculated. But if you are interested in that, then that's the calculations of how whether OBV is going up, whether OBV is going down. Obviously, people are going to generally view this as like a daily trade. Okay, but obviously if you're on the 5-minute chart, then it's just taking it from the close of the last 5-minute chart. So you can use this across every single time frame basically, or you can. So on balance volume, there's a few different ways that you can use the OBV indicator. Okay, so I'll just show you the settings. Actually, there's no custom settings that you need to use on this, but I'll show you what I have it set up like. Okay, if we just remove this off of the chart, we'll remove this off of the chart. Okay, so there's no custom settings that I use apart from I've changed the color of it, but just everything on default. Okay, you don't need to mess around with OBV. All I would say is the obviously here we're sat at 2.24 billion. This doesn't really matter. Okay, so it doesn't really matter what the number on the right says. It's not actually important. We're just more interested in looking for patterns, looking for divergences within here. Okay. Okay, cool. So let's begin. Just going to take another drink. Oh, I really hope that this gets better soon. Sorry, it is a bit painful. So on balance volume. Okay, so there's a few reasons why I'm interested in on balance volume. Okay, so there's a few different ways that you can use this. There's not like one set in stone way. Okay, so I'm interested in the patterns from OBV. Volume leads price so many times, so we can see OBV break support lines or resistant lines before price does. So let me expand upon this. So basically, there's like the saying that volume leads price. Okay, so you will see the move in volume before you see the move in price. So OBV is a leading indicator. Okay, this means that it can give false signals, but it also means that you can get signals, and again, never use OBV on its own. You always want to be using it in conjunction with everything else that I've taught you thus far. Okay, so that's really important. But you don't just use this on its own and think it's going to get you money, because it's not how trading works. You need to always use it in confluence with other indicators. But OBV is a massively helpful tool for firstly, you can use this again to dictate market tops, whether you've lightly reached a really important top and you're coming down. You can use it again for confirmation on a breakout. So I'm going to be going through this in the coming slides, but you can use it for as confirmation. You can use it as predicting whether price is going to break up or down from its range. Okay, so you see how it's coming along. You're in a range. If OBV breaks out of that range, you then could expect price to follow and break out of that range. If OBV is forming divergences at a top, then you can expect price to come down. So it's very much a leading indicator. Okay, so you'll get signals from this generally, okay, not always, but generally before price moves. Okay, so exactly the same here. So if OBV breaks downwards, then we can expect price to break downwards. You can also use OBV for identifying divergences at tops and bottoms of moves. Volume should follow that trend. And so this is a nice example of literally price 2 days ago. And this is one that I did post in the group, and I was saying OBV has broken up, while price has not broken up. So what this is signifying is price is likely to break up. Okay, so if I just highlight this, exactly what I'm on about here. Okay, so what you can see here is clearly the OBV indicator has broken up from resistance. Whereas you can see here, the price is nowhere near close to breaking up. If this was price, then price would have done something like this and started to move on. Okay, so clearly what we can see is from this range, OBV has broken out first, and this is giving you a heads up that price is likely to break up as well. Okay. And then obviously the way that this traded out, we got exactly that. Price did, from its first screenshot to its second, break up. And this is where I was all about, the OBV signal played out, and then I had a lot of comments from people saying, please do the OBV. But that's just a nice, like, sort of live, it happened 2 days ago, way that you can use OBV. So you are using it for, breaking out of a range, coming to tops, coming to bottoms. But yeah, this was a nice range bound example of what exactly you're looking for. So you're looking for OBV to start breaking above its old resistances while price is still maintained within it. You just have an inkling. So this would be known as like a bullish example, and price is likely to break bullishly out of that range. So I love to check OBV when we're range bound. So how else can you use an unbalanced volume? And this is generally the most known way. So obviously OBV is not a difficult indicator. You really should be able to master it by the time you finish this live stream. It's a really, really easy indicator to use. It's definitely not difficult. But yeah, this is the main way that you'll see use, because it's a really well-known indicator, to be honest. So what you can see here is this is price following. So when we look at this section of the chart here, so this section here, this is used as, many times you'll hear me say we're waiting for confirmation. And obviously confirmation, there's many forms of confirmation, but this is one form of confirmation that we can say of like a healthy uptrend. So here we see price making new highs, and we see OBV also making new highs at each high made on the chart. This is volume following price, or price following volume, and a healthy uptrend. At this point, you would expect it to continue because there are no red flags of the volume. Again, and as we all know, volume is massively important in trading. So there's no red flags here. This shows like new money coming into the market, essentially. Use this in conjunction with open interest. We can generally say we can see like more volume coming in as we're going up higher. That's exactly what you want to see for a healthy uptrend. And as I've wrote here, price and OBV were making new highs together, a healthy uptrend. And then this is where you get your divergences coming in. So here what you can see is our price makes a new high, but our OBV now has not made a new high. So this is now where we're getting really just classic divergences, where price is making new highs, OBV has made a lower high. So this is now your bearish divergences, and this is what you're looking for. Again, don't use this on its own, but this is what you're looking for identifying potential highs. For potential areas where market is going to turn around. And as you all know, this was the 10,500 high, and we dropped all the way down to 3K. So that was obviously a massive significant high, and you did have the bearish divergences on the OBV indicator at that high. So this is like one way that I would say you 100% should be looking at unbalanced volume. So use it for identifying divergences of an uptrend or a downtrend. So the same way that you identify like RSI divergences, it's the exact same thing. Or the exact same method, but this is a lot more powerful in my opinion than like RSI. So OBV really good for divergences. So the next way that you can use this, again, so this is similar to this one where we saw the OBV leading price. So this is another example of OBV leading price, where here, as we can see, we're in this descending triangle. We break out of the triangle, and then here this is a 4-hour chart, by the way. So here you had 1 week of sideways price action. So 3-4 days of sideways price action here. Here we can see price coming sideways, but look at the OBV. So look at the OBV falling really heavily down here. So we can see price, OBV is definitely on its way down. So money is coming out here, but price is maintained. So when you view this as volume leads price, then this isn't a scenario where you 100% you would be expecting downside. As you'll know, again, this was a position where I was shorting Bitcoin, and again it gave an amazingly good short position. But you know, the OBV was really leading here. Okay, we could really see it coming down heavily while price was going sideways. So just as in this indicator, we could see it going up while price was essentially sideways here. We hadn't broken the top of the range, so that would give us an inkling that it's coming down. Here we can see price going sideways while this is going down heavily. So really heavily it was going down while price was more or less sideways. So that is a really big signal that you'd be looking towards, that this is going to be breaking down shortly. Okay, so that's another way that you can look for OBV. So obviously the divergences are really massively important. The the way that it is like used as a leading indicator. Okay, so you'll get heads up before the price moves. You'll see the OBV, the volume moving, and that's going to give you an indication of whether you are likely to break out of the range bullishly or bearishly. Okay, and then you can also use this as like patterns. So this is a way that I myself am not using. Okay, so I don't actually trade off of OBV patterns, but I know for many people it works really well. So that's why I've included it here. But I'm not actually going around using OBV to try and find like triangles, trying to find different patterns and trading off of them. I'll be totally honest with you, that's not something I do. But I'm adding this in because you could do this and find it helpful. But essentially it's kind of like leading price again, so here you have there's your bearish divergences. Okay, so there's the new high formed. So I would say there's the bearish divergences, that's the reason to short. But then what you could also see is this forms like a symmetrical triangle, and price falls out of the symmetrical triangle before price turns bearish. Okay, so you can use this as like a basically using it for patterns such as this. Okay, so if you have a pattern within the OBV, if that pattern breaks, if you break bullishly from the pattern or bearishly from the pattern, then one would expect price to follow off of that. Okay, so I'm not generally using this to identify patterns, if I'm honest, but many people do, and many people are successful with it. So this is a way that you can use it. But I would say I really like to use it for like looking for insights into where price is going to go. Like the leading indicator value of it is massively important. So if I already have like a bias that's bearish, and then I see like OBV breaking down before price has, well, that's just giving me a massive amount of confirmation, exactly what I want to see. Because I do place sorry, I need to try and speak a little bit slower. I do place a really, really, really big importance on volume, as you all know. So I can see this, then it's just like coming together so nice. This is the confirmation that you want to see. Okay, so if you're trend following, you really need to see OBV confirming price, so giving you a healthy uptrend like this is exactly what you need to see. Okay, and when you're in range bound situations, as you know, I love trading range, and this is a way that you can somewhat tell. Obviously it does give false signals, so let's not pretend it's 100% win rate sort of thing, because it's obviously not. But if you believe you're going to break out of a range bearishly, and you see OBV breaking out of that range bearishly, maybe you're hovering over support. As you know, consolidation over support is bearish. So if you start seeing the consolidation over support and the OBV breaking down, well, that's giving you a strong possibility that you're likely to break down from here as well. Okay, so that's the way that I love to use OBV, and it's really, 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 really a really powerful and great indicator. When used in conjunction with other technical analysis, it's so powerful, and that's why it's like always on down at the bottom of my charts. Whenever I come over to my volume, it will always be on my charts. So I find this indicator really, 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 really good. So yeah, that's OBV. So if anyone has any questions about this, please write your questions and I will go through them all. Sorry. So yeah, please answer your questions. I'll stay on stream for like I'll take all your questions, don't worry. Well, I can see there's quite a lot. So yeah, we'll go through them all. Okay, cool. So let's see what we got here. Your stop loss would be below the bottom. All right, so that was the question referring to my original chart of the week, and yeah, the stop loss you don't need to have, obviously. Oh, I kind of explained that you don't need to have your stop loss at the low of the wick. You can use like higher price action for your invalidation level. Daniel, do you have a full Elliott wave count on Bitcoin? Not really. I've not really been updating my Elliott wave. I'm not trading off of Elliott waves at the moment, so I don't when I'm not trading off of it, I don't put much emphasis on like updating my counts. So not really not anything that's worthwhile really showing you. I'm not trading off of it. Daniel, did you mean we have had a negative funding rate after that big move down, or positive, and you did the opposite of what the market would have traded? No, so after that really big move down, okay, after that really big move down, it was really shortly after the funding had just been paid. So what we saw was the predicted funding rate. Okay, that predicted funding rate went massively to favor. It did massively went to favor longs. So that is kind of signifying to you that after the massive move down, everybody has entered their short positions. Okay, so it obviously, we can look at the footprint charts and delta charts to really verify this, but you'll see it did verify it. So upon seeing that massively negative funding rate, it was just another reason. Okay, so we're referring to this, why I longed down here, by the way. So after seeing that, essentially another reason of seeing that really negative funding rate, that was another reason why I felt confident in trading this long. And as you'll know, it traded really perfectly, but that was one of a big reason of why I felt confident in taking the long down there. And as you'll know, if you're in the champions group, then you'll know that like my live comments as this was coming through, while everybody was commenting like really bearish things, I was just like, I'm sat in a long, I'm only in a long, and I feel confident in this long. There's nothing for me to go short at a reason at the moment. We're at support, I'm happy to be long. And then like minutes later, or like 20 minutes later, you see an absolutely massive move to the upside. So people were really amazed by that trade, which was cool. So you use OBV? No, so it calculates off of the close. Okay, so it does calculate off the close. So yeah, this is kind of the thing. So it does calculate off of close, and as you know, similar to RSI also calculates off of the close. Okay, so they both calculate off of the candle closes. Okay, so that is important to realize. But as you know, with RSI as well, I also like to use it off of the wick, and I know that the calculations are off of closes. Okay, so I do know that the calculations are from closes, but I do nevertheless like to look at the wicks from where the price action is, and this is, I suppose, a more of a what's the word I'm looking for? More of a non-standard way of using it. Okay, because obviously it's not calculated from the closes, but it is calculated from the closes, but I will still look to the wicks, and that's because I feel like that's price action did reach there. It is still important. So yeah, I will look from where the wicks of the ranges are. Okay, so I will look for where the wicks of those ranges are, but obviously when you're looking for like your divergences and stuff, so that refers to the ranges. But when you're using like divergences, then you're going to have to go off of obviously closes, because your divergences are from the closes. So that's like a difference between range bound trading and obviously when you're looking for divergences at market highs and market lows. So to answer the question, OBV does work off of the closes. It gets all its calculations from the closes, but you can use it from the wicks when you're in a range, or I do anyway. When it's in a range, I'll look for the wicks, and I know it's not calculated by that, but that's how I use it. And from divergences, you're only obviously looking at the closes. Is the OBV the same as CVD Plus on Trading Light? No, they are going to be slightly different. They're going to have like different readings, for example. So you're going to see this is going to read something different. 35 mil. This is not going to read 35 mil. This is going to read like 2.82 billion. So yeah, they don't use. Yeah, they're different. Yeah. What time frame do you use OBV mostly? So I wouldn't really say there's like a time frame where I use it mostly. You can use it across all time frames. So I wouldn't say like, oh, I only use OBV on this time frame. I use OBV across like all the time frames. So I mostly I don't know. I like to just give an answer of like 4-hour chart, because 4-hour chart is a really, really neutral time frame. It's not a scalper's time frame. It's not a swing trader's time frame. It's like a neutral time frame that everyone like it should look at, whether you trade anything. So I suppose 4-hour is where I use. So my answer is I use it across every time frame. So it's hard to say where I use it the most, but 4-hour is a good time frame for this. Okay. For the OBV, 4 hours is a good time frame. Looks like OBV is making slightly bearish divergences on the 1-hour chart. It's consolidating above 6,600 support. Would this confirm? So this, well, let's take a look at this. So let's come up to the 4-hour chart. Okay, let's just remove everything. Actually, we can just keep it on. So here we obviously have been making. If we just come back a step from here, we did make new highs, and here, well, we did make our new highs as well. So we have made new highs here. So this is like confirming. One would say that this is like a healthy trend so far. Let's just make this a bit bigger. Let's just remove this off the chart, make it a bit cleaner. Let's remove this off the chart. Okay, so this is then what we can be looking for. So I would say firstly that this has made a new high. So this section of the move has not had any bearish divergences locally. So this is so far a healthy move to the upside when looking at OBV in particular. Okay, so we can say this is healthy so far. Okay, so then what can we look at here? We can look at, we made a new peak, double top, and from here, well, we basically made double top. So again, there's no divergences there. This is basically the same price action. You've obviously come down and made a new low here, but you've also made the price action has made a new low, so this is followed with the new low. So there's nothing here that's signifying to you that this is bearish right now when looking only at the OBV. There's nothing right now on the 4-hour chart that this is saying that this is coming to come down. So we come on to the 1-hour chart. What we can see is, well, made a new low. Okay, so there's nothing really tradable off of this, because obviously we come down really, really quickly and formed this new low. We formed a new low here, but from this new low formed, obviously this has formed a new low on this candle, but it's not really breaking down at this point. So what we could say is, if it broke down from this low, okay, so if we start seeing this break down one more time from these lows and you're still like hovering down around this support, then that would be like tradable. But because we haven't actually broken down from the low made, and neither has price, there's no tradable action on it for me anyway. There's not anything tradable that's saying, well, this is going to break down, this is going to break up. So in terms of like a leading indicator, there's not one actually at the moment of looking at OBV of whether this is likely to break down, because it hasn't broke down from that first low made. Okay, so for me, I would say looking at OBV, I would not say that this is bearish at the moment. Okay, there's no reason to be bearish while looking at the OBV at the moment. What does the scales mean? Yeah, just ignore the numbers. Okay, so the numbers are really, 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 really irrelevant. Okay, this is really, really, really irrelevant. You need to know zero information about the numbers on the side. Okay, so I'm not even sure what these numbers on the side are going to be signifying here. It's totally, totally not important. Okay, it's just not important at all what these numbers on the side are saying. You're actually only going to be looking for the divergences, the breaking down or the breaking up. Yeah, these numbers on the side are really, really like totally irrelevant, So yeah, they hold. I suppose they're going to be like signifying of the volume of what we're looking at here, but what the numbers actually say is it really doesn't matter. Could you please confirm whether OBV is showing a bearish divergence on the 1-hour chart, comparing the high on the 20th of March? So I guess that's the one that I've just gone through. Okay, so the 20th of March would be, yeah, so for me there was no bearish divergences there. Oh, I'm not sure why it's not loading right now. Yeah, so for me, you made a new high from here to here. So in terms of like when we're looking for divergences, then we can say there's no reason to be like bearish at this moment in time, because this did make new highs up against our last peak. So yeah, for me, there's no bearish divergences on that. About your harmonic pattern trade, did you wait for price to confirm, or did you set limit buy orders? If you do that, where is your stop loss? Because on that trade we had a long wick down from any entry. Yeah, I had a limit order waiting, so I did have the limit order waiting, and I'll try and search for the trade. So I would have typed yeah, so here we go with the trade. So I actually had a limit order waiting, and I'll try and find the exact trade to show you all. Yeah, so there you go. So I had the limit orders waiting for this preset. Okay, so when you're looking at that Gartley, when you're looking at this Gartley, okay, where's the invalidation of a Gartley? So if you don't know how to trade a Gartley, the invalidation is the low of the wick. So I don't. So this is going back to soft stop losses. When I entered my orders here, I did not have a stop loss set here, okay, because this is the way I trade with soft stop losses. It means you don't enter a stop loss in the book. So yeah, I had orders set preset waiting here. I did not have a hard stop loss preset here, but if I did have a hard stop loss, then I would place it here, because that's the invalidation. So the long lower wick is really doesn't matter. If you're trading a Gartley, your invalidation is coming below the bottom of X. Okay, so you would have your stop loss here if you had a hard stop loss, 100%. This long lower wick is absolutely fine. If anything, it's bullish, and there's no way at all you would have been stopped out on this, because your invalidation is the low, not here, not here, not here, not here, but the low when you're trading a Gartley. Okay, so yeah, so I would say for all of you lot that are going to be using hard stop losses, your invalidation is the low of X. Okay, so that's how you trade Gartleys. So yeah, I had the limit orders waiting for that one. Hey Daniel, IRS, you have bearish divergences on RSI and bullish divergence on OBV. Hey Daniel, IRS, I'm not sure what IRS stands for. I suppose that's an acronym, but I have no idea what IRS stands for. Hey, IRS, you have bearish divergences in RSI and bullish divergences on OBV. So this is possible. If you have bearish divergences on RSI but bullish divergences on OBV, obviously in this situation you're having conflicting viewpoints. Okay, so you could say RSI is bearish and OBV is bullish. Personally, if I had a gun to my head and I had to choose the correct one, I would go for OBV. I think OBV is a lot more powerful and a lot more consistent and just a better indicator than RSI. Okay, I do check RSI, I do check momentum based indicators, but from time to time, but you know, I would say 100% for me OBV is much more important, and I would place much more emphasis on OBV. So if we had the two, I would be going for OBV. But, so this is a big but, if I had bearish divergences on the RSI and bullish divergences on the OBV, am I going to be trading off of that? Well, I think you already know the answer. My answer is going to be no. I'm not just going to be trading from what one indicator says. So this is when I'll be taking a look at all the confluences, okay, that we have in here. This is where I'll be doing all the rest of my technical analysis. And if the rest of my technical analysis is leaning bullish, and then I see the two and I see the OBV is going bullish as well, then that's going to greatly favor me sticking with my bullish bias and obviously opening into a long position and not care what the RSI shows. But if all the rest of my technical analysis is bearish and we only have the OBV looking bullish, well then that's likely a false signal of the of the OBV, and we'll look to head down or look to take a short. Obviously we'd have an invalidation set and stop losses and all that, but you need to just get out of the mindset of saying RSI, OBV. Take a look at the bigger picture and use your other indicator, use your other technical analysis and try and get a bigger picture. So to answer the question, I'd go for OBV, but then to expand upon that question, I would say do not trade just off of RSI and do not trade just off of OBV, but bring it all together. Okay, bring everything that I've taught you so far together and start using more than one technical analysis factor. So I hope that answers that question. What made you exit the recent long on Bitcoin? My reason why I exited this long on Bitcoin, well, my last long was obviously taken at the lows, and the reason I exited it was live again. I'll try and show you this. I don't know. I need to just search the post if you don't believe me. I obviously have posted all the print screens and stuff at the time, but the reason why I exited the long was because of the fact we obviously rejected off the 618 here. We rejected off of the point of control that we had more locally. Okay, so we had our point of control of the local range, which is around 6,700. I will try and find it because then you can see what the chart actually looked like today. So I guess I would have wrote short scalp maybe. I can't remember what I actually posted, to be honest. I can't remember what I posted. So let's just really quickly try and find it. The only reason why I'm trying to find it right now is so you can see what the chart looked like when I done it. So it would have been around here. Yeah, there's the chart. So there's the chart, what it looked like. So as you can see from here, I was into a short position, and that was taken 6,735, and that was because, as you can see here, we came up, we rejected from the middle of the channel, rejected from the CC, and then we obviously lost the point of control. Okay, so that was for me the reason to enter into that short at this point, and obviously it traded really nicely because from 7,700 we came all the way back down once again to 6,000, nearly 6,500. So obviously a really nice short trade. And again, that's where I closed out of this, and then from here, I'm in a hedge short, but I'm like not in any weighted position. So, yeah, that's what the range was like today, when obviously your point of control was at 6,750, whereas now it's 6,000. What did I say? 6,600. But yeah, that's what it looked like this morning. So. Can you use OBV in replacement of CVD? So no, I wouldn't use it in replacement. I'd just use them both. Okay. Yeah, I would use them both. Okay. There's no reason to use one or the other. They're both really useful. Obviously, they're going to be pretty similar, but they are using different calculations. So they are different indicators. They are not the same indicator. So you know. I myself use them both, okay? So I wouldn't say like one's better than the other. I would use them both, and if they both confirm and go together, well, that's generally what you're going to be seeing, by the way. So you are generally going to see them confirm each other. They are going to be giving the same signals, but not always, obviously, because they are different indicators. But if you can see, you know, this occurrence and like the divergences on happening on both of these indicators, well, it's even more powerful again, because again that's the type of confirmation we're seeing out of both indicators. Cool, so I think that might be all the questions then. Let me just go through it as well. Posted a chart to go along with the question. Let's see what we got. Oh, right, okay, so on yours, I'm not sure why yours shows massively different than mine. But yeah, if you're looking at it, that's really random. But obviously mine wasn't showing divergences like this, so pass on that. But yeah, obviously if it's looking like this, then this is looking like really bearish divergences. Okay, so if if this was the case and your chart did look like this, then yeah, clearly that's a big bearish divergence. So you would expect more of a heavier pullback if you're looking at OBV that looks like this in comparison to price. I'm not sure why yours is so different than mine, because mine showed OBV making new highs, so that's a bit random. But oh right, you're looking at the bigger. Oh, so this is from, I did look at the 20th of March as well, so I'm not sure why mine's different than yours, but nevertheless, to answer the question, I suppose, of what this chart looks like, this is obviously bearish divergences. Okay, so you've made a new high here and a massive low here, so this is considered bearish divergence and more of a weaker high made here. So you'd expect obviously naturally a bit of a pullback if you're looking at it like that. Another question. CVD just counts market orders, right? Yes, that's absolutely correct. CVD, we're going off of like delta, so delta is market orders, and OBV is the amount of transacted volume. Exactly correct. So yeah, you know, they're different indicators. They do like measure different things. So yeah, to answer the question here, so to answer this question, CVD does, yes, you are correct with your presumption. CVD does only measure market orders. Can you take a look at the S&P 500? Yeah, for sure. I will take a look at the S&P 500 in a second. Obviously, I'm aware that it has bounced pretty hard. But, you know, for me, this is... well, I don't know. Like, there's a few different things. When we look at the technicals of this, okay, so if we just like look at the technicals of this, then it's looking a bit more bullish, isn't it? Because it looks like you've come down to a massively big low. Okay, this was our low from all the way back in December. And from that low, obviously, we've done our really nice rise for a year. And now we've come back down. But it does look a little bit more bullish when we just look at the chart because of the fact we've come down to that low. We've taken all the liquidity below it and we're back above. That leans you more bullish. You also have to think that the Fed have injected now like 2 trillion or something back in, I don't know, some crazy amount of money. And for me though, this is a relief rally. So I do think this is a relief rally, and you know, you have to expect a bounce at this point. Like it's only normal that this is the place to get the rally, okay? But I am only expecting it to be a relief rally. Obviously, from this one, you had just like a crazy amount of follow through, but I'm not expecting this to just get a crazy amount of follow through and go all the way back up to new highs. To be honest, I am expecting this to be more of a relief rally that does fizzle out and then make its way back down to 2 new lows. So that's kind of my quick opinion on the S&P 500 or just like the markets in general. I feel the same is going to be for the UK markets. You know, all of them, they're having nice relief bounces right now, but I am expecting that these are relief bounces that will eventually be sold back into. I mean, look at things like some of the things I've been trading. Look at Halfords, okay? So Halfords down like 70% and it just had a bounce of 94%. This is a relief rally bounce. There's no reason this is just bounced 100%. If you look at another example, so Marston's, again, this was down. This is even bigger sell-off. So this was down 83% in like a month. And so off of that 83% downtrend, you're now having like 150% bounce. But that's all it is. It's like a relief rally, in my opinion. Like these bounces are relief rallies to come down lower again. So, you know, some of these bounces are more extreme. Obviously on the S&P, this is a bounce of 16%. You know, you see things like Marston 150% bounces. But for me, like these bounces right now are opportunities to get nice short positions again for more swing trades. So that's kind of my perspective on the stock market. These bounces are to be sold for myself anyway. I'm short. I'm like looking to short some of these bounces because I believe that they're giving good short opportunities. I don't feel this is just going to go up again from here. And this is not just so much because of the technicals, like you say, like the fundamentals behind this. You know, for instance, Marston's has closed down. So if they're not bringing in any new money, why is their stock going to suddenly go up again? It just doesn't really make sense, does it? They're closed. They're not making money. Why would this be just go up and up and up and up again? It's very unlikely, isn't it? So you know, I'm expecting it more to do something like this. So yeah, that's more of a technical, that's more of a fundamental reason why I'm bearish on the stocks, because people are losing their jobs and people, you know, coronavirus, people are losing their jobs and all this. So so another person says, please check the OBV on the 1 hour since the 13th of March. Oh, that's a long time ago. Yeah, so this is more of like, you have to think this is like a really long. Firstly, the volume, when we're looking at on a bigger term time frame like this, we have to firstly acknowledge the volume is extremely low. Okay, so firstly, it doesn't take a lot of money to move price. So let's just acknowledge that first. Okay, it doesn't take a lot of money to move price. But from this one back on the 13th of March, obviously we are not making new highs. Oh, so here is the step. that we saw. Oh, so now my chart, I swear when I looked at it earlier, my chart was not showing this. But yeah, there are those bearish divergences actually showing correctly. So I'm not sure how I looked at that earlier. Maybe it was on these peaks. But nevertheless, yeah, those are those bearish divergences from this peak to this peak. And if you look at it back from the 13th of March, as you say, well, there's not really any tradable action from looking at it all back here. Okay, so I'm not really interested in what's happened all the way back here to where we are here. Would be more interested in this, like these peaks and this trough, okay, this valley. So we're interested in this peak here, okay, I am anyway, and this valley here, and obviously that coincides with around here. And what has happened back here is not actually so important to me. So yeah, I'd be looking at the more recent price action between these peaks and valleys rather than what happened back on the 13th. But I would say looking at it on like a perspective from all the way back here is a little bit not going to be actually helpful. So it's not really going to give you a tradable signal, because firstly, this was a long time ago, and secondly, like it's not too relevant anymore what's happened back here. I'm more interested in like these peaks and valleys of the most recent high and the most recent low and the most recent high and the most recent low sort of thing. So yeah, that's why I would say what is happening back here to here is not, in my opinion, important. Daniel, I don't really understand why you use the 30 moving average. So I use the 30 moving average because I like to look back 30 periods. So obviously if you're on a daily chart, okay, so think of it like this: you're on a daily chart and you're looking back 30 periods, then we're going to be getting the moving average of that month. Does that make sense? That's literally the reason I use it. Okay, so think of it: we're on a daily chart, we go back 30 periods, okay, then we get the average of those 30 periods. That basically is going to give us the average of that month. So we're looking at the volume over the past 30 days, which is basically the past month, and I want to see the average volume of that past month. So that's simply why I use 30. I have a feeling you don't understand the way it works out, but this is just taking the last 30 periods and then getting the average of those last 30 periods, of those last 30 bars, you know. Daniel, how much time do you see to discover OBV divergences? Well, it doesn't. So OBV is not a lagging indicator. So I have a feeling some of you don't understand what this is. So maybe I haven't explained it well enough, if that's the case. So OBV is not a lagging indicator. Okay, so when you're looking at things like moving averages, for example, moving averages are taking the periods of the last, for instance, if we're looking at moving average 100, we're looking at the past 100 candles and we're getting the average from that, and that's giving us a lagging indicator because we're looking at past data. It cannot like predict because you're only looking at past data. So, you know, OBV is not judging off of what happened 30 candles ago. It's judging off of like what's happening like right, you know, it's happening off of the last candle close. So if we're on the 1 minute chart, it's going off of the last 1 minute candle close sort of thing, the volume that's changed since that. So we're looking at like data as it's coming in sort of thing. It's not worried about what's happened 30 candles ago. Like that's not you know, that's obviously what a lagging indicator would do, whereas a leading indicator such as OBV is not going off of a moving average. Okay, so it's literally taking the close of the last candle of how it's doing its calculation. So I'll load it up again so you can see. Okay, so it's going off of obviously yesterday's closing prices if you're referring to like a daily chart. If you're on a 1 minute chart, then if the 1 minute candle closing price is lower than the last 1 minute candle, then the current OBV equals previous OBV minus last 1 minute candle's volume. Okay, so I hope that makes sense. I see slightly bearish divergences on Binance and kind of neutral on BitMEX. I would always go for BitMEX, so I would always favor BitMEX over Binance charts 100%. BitMEX for me is like the only thing that I would trade off of on Bitcoin. When you want to trade, what you check from TA perspective? Some patterns, OBV, channels, fib, levels. You probably mixed many of that, but what is the most important? Most important, horizontals. Secondly, Fibonacci. So I'd say, yeah, horizontals really simple, but yeah, number one. And then Fibonacci is probably number 2 or volume number 2, and so like top 3 horizontals, Fibonacci, and volume. And then everything else that comes aside is obviously lower in the list, but the top 3, yeah, that's what I would say. You mean 30 periods is 30 bars? Yes, Nelson. Yeah, that's exactly what I mean. So the 30 periods that I've got on my moving averages is basically the last 30 bars. It just looks back the last 30 bars. Yeah, obviously, yeah, in traditional markets you don't have the weekends, whereas yeah, in crypto obviously 24 hours is yeah, good good observation. That's totally true. Sorry, my throat. So yeah, does anyone have any other questions? If not, I'm probably going to call it a night. So yeah, I suppose I hope that you enjoyed this one. Wasn't so planned per se, because I wasn't planning on doing actually one on OBV. If I'm honest, I wasn't actually going to do one on OBV, but nevertheless, we had it, and so I hope that this one has been helpful for you all. Okay, and you can now, like, because not many people use it. When we see people posting charts, I don't really see anyone using it. So it's obviously a really, really helpful indicator. So now you know what you're looking for, specifically the divergences, the way that we can look to break in and out of ranges. And if you want to, start trying to find like patterns. This is not something that I do, but some people right now might be saying, I don't know, like, here's a trend line, and if we break this trend line, then that's a short. So if the OBV does this, okay, so if OBV does this, then breaks this trend line, and people are going to be reacting off of that and saying, right, this is bearish because we've broken this trend line support, and now if that's the case, we're expecting it to come down low, then we'll expect price to come down lower. So that's one thing people are going to be looking at. So that's like an example of a pattern you could look at right now. Or not so much a pattern, but like just simply a trend line. Okay, so simply put on a trend line, and this is how you can like essentially look at it. Okay, if this breaks here, then we expect it to bounce. You can see there, bounce, 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 go through. Then you expect price to go down. Yeah, so I hope that this stream has been helpful. Obviously, a little recap, I suppose, before we go. We've gone through the Tezos chart a week. You can see what I'm looking on that one. Then I went through. I'll go through next. I went through how I've been trading Bitcoin over the last 48 hours really, and I once again that trading has been insanely good. So I kind of don't feel I've done it justice today, but yeah, they were insane trades, to be honest. So yeah, and then I obviously went through a little explanation of like another review of like why I use soft stop losses and how they are helpful, okay, and also how they are not helpful, because if you do not have the quickness of monitoring charts, then a soft stop loss can absolutely destroy your whole account. So that's obviously a massive negative if you don't feel you're at the level of managing them. And then I went over the main focus, which was OBV and on balance volume, and how we can look for this to really, we're using it for, once again, confirmation. So I'd say the biggest steps that I would use it for are confirmation. Okay, so if I'm not seeing a healthy uptrend, so I mean confirmation like this, if I'm making new highs, I want OBV to making new highs. If we start doing this, then this is for me a red flag, a bearish sign. So I really would say the biggest use case is on monitoring confirmation of an uptrend, making sure everything's healthy, and then the divergences when they start to form to try and get your market tops. And secondly, yeah, when you're in a range, and if OBV starts breaking down or up from the range before price does, then I would use that to kind of predict where price is going next before it happens. And this was the example of this, like literally from 2 days ago, where we saw this breaking up first. So yeah, those are the OBV, how I use it. And yeah, I hope that this stream has been very beneficial for you. Next week is going to be a really good one. So this is where it starts getting a little bit more advanced. I'd say, like, obviously the first stream was last week we went over another form of like confirmations and how you use volume. Today we've gone over the proper divergences and OBV, and next week it starts where it's getting a little bit more advanced, where we're going to be going over the VPVR. Okay, so yeah, that's going to be a really, really good one. How we use that, how we use like fixed ranges, session volumes, obviously the value area, highs, value area, lows, pointer controls, all that good stuff. So yeah, from here on, it's going to get a little bit more advanced and more advanced and more advanced each week. I think we've started off fairly easy. So yeah, that's to obviously look forward to, and I hope that you are looking forward to it, I suppose. In the meantime, as always, I'll be in the group, showing you trades like today. Literally, it's been insane. I'll show you where I was on that long, just so you can like see the emotional side of thing. And this is not to like call anyone out, but I'll show you what was like happening as we were coming down. Okay, so this is where I said I was waiting for the long. So again, it's all about like patience. Okay, so it was all about patience, and my comments were big level, but I would like it to search for liquidity a little bit lower and then bounce rather than 6,400. So it's like a case that I'm waiting for this to come to me. I'm waiting for this to come down. I don't want to like take the long too early, and this is referring to I could have longed this slightly earlier. Okay, could have longed it slightly earlier here, but why to try and take the long? And let's go on to the 5-minute chart and imagine what we would have been thinking at the time. I'm waiting for it to come down below this low before I enter. Anybody that had entered in this period, and you had to remember you were going sideways here for a total of, if my thing is actually going to work, a total of 50 minutes. So it's quite a long time as for a scalp trader. 50 minutes of patience. Not everybody has that. People are going to jump into their longs too early and lose money. So it's a matter of waiting for 50 minutes to catch the long. Okay, and then when I got into the long, took the long position, and then obviously added upon the flip, and that was literally the 6,550 flip. Once we done that, we flipped 550, and then we got a massive move to the upside. But obviously in this position, and there's the funding rate, by the way, that I was on about. But during this time, there would have been a lot of people really, really, really bearish. Okay, so there would have been many people really bearish about what's going on, and yeah, this was like what we were like looking through. So you can see all these sort of things, and yeah, there was like the insane bounce that we got, and then from that obviously went into so yeah, this is like what I was saying. 99% of the market literally were so scared at that point, and you just take their market, take their money, and then yeah, went into the short position. Yeah, it was obviously a really great day of trading. So yeah, I wanted to go through that, and like it really just highlights and really just want to stress like the emotional side of trading. And if you do not have your emotions on check, then you will lose money. So obviously that's not something I can I can teach, but it's something that you have to work on day by day. And the more that you learn, the more confident you're going to get with trading, because you should find yourself like winning more trades. Cool, so I think that's all the comments then. So thank you everybody so much. Just wanted to say a big thank you for all the knowledge you've shared over the past year. It's been a great journey. Thank you so much, Igor. Really great. Thank you, my friends. And Igor is a really, really, really good trader, by the way. So just when he shares a chart, take a note, because his charts are really good. Great stream. Thank you, everybody. Thank you. Exo charts, that will probably be, I suppose, maybe after the volume profile, so maybe in 2 or 3 weeks, I would say, exo charts. Are you going to go on COD? Yeah, we were actually on about doing I think we're going to go and play some games together. So where was our comments about this? Yeah, I think we're going to go and do some games after this, so you can join us if you want. I think Call of Duty or Borderlands, I think is what we kind of decided. But yeah, I'm up for playing that with some of you straight after this stream, to be honest. Try some honey. Thank you, everybody. Yeah, that's a wrap then for me. So thank you once again. Hope that you've thoroughly enjoyed this, and I'll catch you over in the channel. We'll go and take some more trades. So cheers, everybody. Thank you and goodbye.